Think about gold. I mean, there's no intrinsic value to gold other than we say there's intrinsic value to gold.
I see.
Gold is a store of value. And so people hope it goes up. There are some people who think that, if there's a catastrophe and the economy craters, then gold will retain its value. But it's not like you can walk around with a bar of gold and, like it's 1822 and you slice off a little sliver and you weigh it. Someone's just going to knock you out and take your bar of gold. So let me translate that to Bitcoin.
Yeah.
Okay. Bitcoin has become a store of value. It's, marketed that way and has been marketed for the last, 15 years or whatever it is. And it's gotten to a point of acceptance, just like way back when gold got to a point of acceptance as an alternative for legal currency or as a foundation behind legal currency.
Right.
Bitcoin has kind of taken that place, and it makes more sense in a lot of respects. You're not going to carry around that bar of gold, but you can carry around, your phone, as an example, that has Bitcoin on it. And if you need to transfer value to somebody else, it's easier to do it right now, particularly if you're 21, with Bitcoin than it is with gold. So there truly is an economic value there. It's faster and cheaper, particularly for international exchanges. So,
Okay.
If you're in, pick a country, right? And you're like, Mark, I need something to spend, right? I need some money. It's a whole lot easier for me to send you, $100 in Bitcoin or Ethereum or USDC than it is in cash.
Bitcoin is positioning itself as the next global reserve asset, surpassing gold and revolutionizing traditional finance. That's the view of billionaire entrepreneur, investor, and TV personality Mark Cuban. Cuban sees Bitcoin's massive potential as undeniable. It's easier, safer, and more accessible than ever before. On track to become a store of value akin to gold, Bitcoin stands out as faster, cheaper, and more efficient. Already, it's proving to be a superior alternative to traditional currency, especially for international transactions. This is why many successful entrepreneurs, including Cuban, believe now is the time to invest, as the future of digital currency unfolds before our eyes. Stay tuned until the end of the video, where Mark Cuban shares his expert insights on crypto in an engaging conversation with weekly show host Jon Stewart.
Hi guys, hope to see you guys at Dubai Token 2049. We have exclusive 10% off the limited super early bird tickets. Click the link below. This pass will grant you access to speaking sessions, networking app, exhibition hall, daily networking drinks, and also included breakfast, lunch, and coffee breaks, all included the package. I'd love to see everyone there. Peace out.
Wait, I apologize for making you do this remedially.
No, that's okay. I like it, right?
But I really don't know it so well, and I would like to know it.
So just think of Bitcoin like digital gold, period, end of story.
Oh.
It's just built on supply and demand. Only the difference is people are still mining gold and it's physical. You have to pull it out of the ground. There's a lot of cost associated with that. Bitcoin is all digital, but it's limited in the number of Bitcoins that will ever be created to 21 million.
Now, who limits that? Is there an overseeing body that makes... No.
That was part of the original plan. That's the way it was designed originally. So right now, there are about 19.8 million Bitcoin out there, minus what's been lost along the way.
How do you lose it?
So early on, you might have bought a bunch of Bitcoin in 2012 for 10 cents each, didn't think twice about it, threw away that phone, and you had 10,000 Bitcoin on it.
Oh, dear God.
Yeah, so there's stories about people literally who put hard drives into trash heaps and lost it. And now we're searching in trash piles looking for it. So, but that's Bitcoin, and it's just supply and demand that defines what it's worth. Very analogous to gold.
Right.
So then there are other cryptos. Ethereum is one that I also own a bunch of. And the difference with Ethereum is it really takes advantage of the blockchain, but it adds something called smart contracts. And what a smart contract is, it allows activity to be triggered by other activity. So for instance, I won't go into deep details, but if I want to create an NFT and use that for books, right? Just let's say for textbooks, right? That smart contract associated with that NFT has specific features about it. One of the unique features that are part of Ethereum and smart contracts and NFTs is they can pay royalties. So if Jon Stewart writes a book for a college, right? And it's a textbook on accounting, Right now, it's got to be physical, and then you go to the bookstore and you buy a used copy. But for every used copy that's sold and resold,
or an ebook that they would download or something.
Right.
Well,
the physical copies, you don't make another nickel in royalties as it's sold and resold. Right. If you do it as a digital version using Ethereum and a smart contract and an NFT, the royalties can be paid on and on and on and on again as that digital textbook is resold. The challenge for crypto right now, in all candor, it hasn't had its Instagram moment. If you remember going back to the original App Store in 2009, I think it was, there weren't a lot of people downloading apps for their smartphones. I mean, unless you were really geeky and into it. But then all of a sudden, Instagram came along, and grandma and grandpa and mom and dad needed it. Then Facebook had an app. And so that really got people into smartphones and using and downloading apps. We haven't had that moment with crypto yet. That's still something that has ultimate utility for everyone and anyone. That doesn't exist yet. And that's kind of the ongoing hope. But now let's tie that back to Gary Gensler.
Right.
So all these people trying to come up with apps that run on smart contracts on top of Ethereum, Solana, whatever it may be, whatever form of crypto it may be, Gary Gensler wanted to call all forms of that a security. And in some cases, they were securities. If you're selling them to raise money for a business, that's a security. Nobody's arguing that. But if you happen to buy an NFT as a textbook, he wanted to call that a security as well. If you use your Solana or Matic or not Ethereum, but let's say Solana or Matic, two smaller cryptocurrencies, to purchase something online, he wanted to call that a security as well. And as a result, that sent a lot of developers who were trying to create these new smart contract apps out of the United States to other parts of the world, Singapore, Japan, Korea, you name it, to start companies that otherwise would have been in the United States. I had two companies that actually left the US to do their development because they could just sell to crypto enthusiasts and users in other countries and not worry about it here.
The SEC's stance on cryptocurrency regulation has sparked significant tension within the agency and the crypto industry, particularly in 2024. Under Gary Gensler's leadership, the SEC has aggressively targeted crypto firms, classifying many digital assets as securities. This crackdown has prompted some companies to relocate operations outside the US, leading to mixed reactions across the industry. Now, with Gensler preparing to step down, a shift in regulatory strategy could be on the horizon. Paul Atkins, a potential successor, is known for his more relaxed approach to regulation, which could signal a more crypto-friendly environment. However, ongoing lawsuits against major players like Binance and Coinbase are likely to shape the SEC's approach moving forward. While Gensler's departure could mark a turning point for crypto regulation, the direction the new leadership will take remains uncertain. Do you think the SEC will adopt a more favorable stance toward crypto under Paul Atkins? Share your thoughts in the comments below. Now, let's return to Mark Cuban as he offers more of his insights.
What can we put in place if it's not a securities regime that has regulation? What do you put in place that can protect people who want to invest in this, but are not, like in the way that the government would put in FDIC protections if you had a certain amount of money in there? Are there protections that you think would be worthwhile?
Well, for sure. So, I have this company called lazy.com. So all it is a place for you to show your NFTs. So if you go to lazy.com/mcuban, you get to see the NFTs that I own. I wanted to register it with the SEC to make sure they didn't come after me in the event I decided to raise money. When you go in and start filling out the forms, you find out immediately that it's apples and oranges, that it doesn't, you're trying to fit, the round into the square, and it just doesn't work. And so all the crypto industry has asked for is to modify the forms and the regulations to be suitable to crypto. It's not that, we don't want to register. It's just like oil and energy has got their own special set of forms with the SEC. Finance has got their own special set of forms. Crypto needs a special set of forms. That's all anybody's asked for. The bigger companies can introduce regulations that make it harder for the smaller companies to compete. They can introduce friction that makes, filling out forms and all these things very much more difficult to even get started.
And state and local that you pile on top of that. I mean, it kind of really rolls like a snowball down a hill.
Yeah, and that's where AI more than crypto. Look, to wrap up on the crypto side, there's this thing called DAO, DAO, right? Distributed Autonomous Organization, I think is what it stands for. And with DAOs, it's really easy to set it up so that for anything to happen within that blockchain or within that organization with those smart contracts has to be voted on. And it's voted on by people who actually own the cryptocurrency, which could be, well, it's not Doge, but there's other types of cryptos that...
So it's a crowdsourced regulatory idea?
Yeah, I wouldn't call it crowdsourced, but it's a progressive's dream, from each, according to their ability, to each,
Right.
It's just, it's everybody gets an equal vote. Right. And whatever the group decides, and it's up to the DAO to set up the principles of it and what's voted on and what, is it, a majority, a supermajority, whatever it may be. And then you get to decide, and that goes into evolving that digital currency or the digital applications that are there.
As the crypto industry continues its rapid evolution, groundbreaking technologies are emerging that have the potential to transform and disrupt systems worldwide. Crypto is no longer just about digital money, it's expanding into new areas with far-reaching impact. Regenerative finance is leveraging crypto to fund environmental restoration projects, while central bank digital currencies are modernizing payments and making financial services more accessible to underserved populations. At the same time, decentralized identity systems are empowering individuals to take control of their data, enhancing online security and privacy. Meanwhile, decentralized AI is merging blockchain with artificial intelligence to protect data and provide small businesses access to cutting-edge tools. Industries like healthcare and finance are already using this technology to solve problems more efficiently and securely. Crypto is evolving into far more than a financial instrument, it's a driving force for innovation, creating solutions and opportunities in an increasingly digital world. Are you ready to be part of this advanced, transformative future? Share your thoughts in the comments below. For more Daily Dose Crypto news, check out these 2 awesome videos on your screen. Click now and we will see you on the next video.